Hi, I'm Tim Harrison. I'm the Managing Director of Ionic Rare Earths. We're developing a large ionic absorption clay deposit in Uganda, a unique basket of both magnet and heavy rare earths. And with that product, looking at going downstream, developing a vertical supply chain into ultimately end users across the EV, offshore wind, military and defence industries.
And I'm Andrew McIlwain. I'm the Managing Director of Investigator Resources. Investigator has a number of tenements and projects in South Australia. The prime asset is our Paris Silver project, which in today's price has about $1.5 billion worth of silver in-ground value. We're moving that project through to definitive feasibility and with a view to taking it through to production.
My name is Paul Bibby, Akora Resources. We're high-grade iron ore in Madagascar. In April this year, we announced our maiden resource for the Becky Soper project of some 200 million tonnes of iron ore. We've also got other projects which we've started doing our geological work on, which are looking promising. Those rock chips behind me are the recent rock chip, 68%. So we've got a really good opportunity for a high-grade DSO startup, as well as a high-grade iron ore concentrate future going down the track.
Brilliant, gentlemen. Thanks very much for that introduction. We're going to talk today a little bit about the markets. And obviously, you want to talk about your own companies, but I'm more interested in how you behave in an environment like this. Investors are very much risk off, sit back and wait and see what happens with this economy of ours. I mean, Tim, have you had to adjust your behaviour?
Look, we've just been focused on getting the feasibility study done at Makuutu. We're also looking at developing our own refinery, going downstream. Working with potential strategic partners there. And earlier this year, we acquired Seren Technologies, so also developing magnet recycling. So as far as changing what we're doing, not really. It's really focused on just delivering what we've set out to achieve and ultimately getting Makuutu into production as soon as we can.
And what about you, Andrew? I mean, you're South Australia. It's pretty easy doing business down there, isn't it?
Relatively, apart from challenges of COVID and so on as well. But look, interestingly, our project, and if you say if we had changed our approach, we're marching from the pre-feasibility study that we declared at the end of last year through to definitive feasibility study. We are reliant on support of shareholders, so always cognizant about balancing our work and expenditure with what our capital requirements are. We have enough cash in the bank to keep moving forward at this stage. And look, it's an interesting environment. We all saw sort of post-end of financial year sell-off of shares. And I think people are seeing a recovery now as people are coming back into the stock.
I mean, so Paul, I want to kind of go around you guys and give you a chance to speak, but then I want to get into the conversation about how you think investors should be behaving. So, I mean, Paul, you want one of the smallest company on here in terms of market cap. You need that liquidity. I mean, do you think investors are right to be risk off? Do you think they need to be preserving their cash?
Look, it's an interesting time for us. Like the others, we are continuing with our work plan. There's no doubt about that. We've set ourselves some targets. We're urgently working through those and getting good results. We've also been spending a lot of time talking to our investors, and we've got a fairly unique situation where 60% of our shares are held by the top 20 shareholders. And I speak with them routinely, and none of those are sellers, and they haven't been, because they see the work, they see the results, they see the long-term opportunity with the high-grade iron ore. Our dilemma is, as you said, liquidity. So it's buyers, and how do we attract new buyers to the story? And that's also something that I've been working on, trying to find ways to connect with people who understand that the future, no matter what it is, whether it's rare earths, copper, gold, lithium and the like, iron and steel are going to have a part to play there. And the demand for iron is going to be strong going forward, and getting people to understand that as that demand increases and the pressure is on those producers for improving their green status, their carbon footprint, the high-grade iron ore that we can deliver from our Madagascar projects fits very well with that future.
Right, and Paul, so Tim, how do you feel about this? Because in an environment like this, where rare earths is getting all the headlines, working into an EV build out globally, Are you surprised that some of these metals, certainly the battery metals, and in your case, rare earth metals, have come off so much, given the kind of demand supply numbers that we're seeing?
Oh, look, I think it's just a matter of time before those prices rebound. And I think when they rebound, they're going to rebound pretty strongly. Simply, the world needs more battery metals. The world needs more rare earths. These technology metals that are going to unlock all of these future, net zero carbon initiatives. There simply has to be more brought on. There has to be more brought on. There has to be the processing capability brought on to be able to build these new supply chains. So I think there's still going to be tremendous growth beyond this decade and beyond in order to meet these milestones.
But tell me this, I'm going to stick with you for a second. We've seen, companies like Ford and Tesla kind of moving back upstream just to secure their supply chain for the next, 5, 10, 15, 20 years, because they're not quite sure that they're going to be able to buy the way that they want. So do you think we'll see more of that? And is that going to replace the kind of traditional route for companies getting funded?
Well, to some degree, it's back to the future. I mean, when you looked at, Ford building their initial production at the start of the 20th century, they had access and they had ownership in mines. They had ownership in supply chain because they needed to have that guaranteed supply to meet their targets. I think going forward, security of supply is going to become increasingly more challenging for manufacturers, certainly beyond the EV space as well. The reality is, in order to get access to the material, it's a finite amount of material. These companies are going to have to go upstream. They're going to have to stake a position to secure the product.
Yeah, and so, Andre, for you, you're in the precious metal game, but some copper in there too, but precious metal game, I mean, the normal rules don't seem to apply anymore. In an environment like this, you expect silver, gold projects to be, flying off the shelf. But the reality is, again, people are still unsure.
Yeah, look, and interestingly, Tim's line about electrification and decarbonisation is almost a great introduction for me, because if you look at the statistics where the forecast for electric vehicle construction is 400 million units per annum by 2025, every one of them has 2 ounces of silver in them. That's 800 million ounces of silver, which is today's production. And that's before you take into account, photovoltaic and any other consumption of silver. So at some stage, there's going to be a demand-supply pinch in the silver business. And you say it's interesting. You say, what are our investors looking for? And we started by saying they're looking for news flow. And I always say, if exploration companies stop work and stop news flow, it's like stopping a watch to try and save time. It doesn't work for long. In fact, Herbert Hoover, that was his throwaway line, but stopping development to save money is like stopping a watch to save time. But the challenge, as I said, the thing for us in Australia or is in the silver space is that we're really a one-off. So we're a proxy for silver investment. So it's a little bit different to base metal explorers and so on. But decarbonisation and electrification is going to need rare earths, going to need silver.
Right, but if you talk about news flow and companies talk about catalyst moments, there's been a great expectation every time you put out a news release that it'll move the stock, but it hasn't played that way for the last 18 months, 2 years. I would argue. So, what do companies need to focus on? What do investors need to focus on, which is important versus just news, in your opinion, Andre?
Yeah, look, so there's no panacea for turning the share price around. I think investors, sometimes you put out a news release, it reminds people they've got the stock and they sell it. So you sort of be a little bit cautious, but the side of it is it's about where you're adding value. You can put out some spectacular drill intersections, but how does that fit into the overall story about how this project's going to be a value add for shareholders going forward? And that's what we focus on, not individual drill holes. It's the project's far enough advanced about where are the value propositions for us to take this project forward.
Right, and Paul, for you, okay, iron ore, but big Australia's famous for it, right? And but you're a small company. You're going to have to behave slightly differently from slightly more advanced exploration stories. So, what is it that you think is important for your shareholders to be looking at? What are you trying to do or talk about out there that you think is important?
Look, our shareholders have brought into the high-grade iron ore story and how that feeds into decarbonisation. Not every iron ore player can deliver 68% iron with low impurities. And as the industry shifts, we're in a good position to feed into that. The other side of that, which I guess is no different for Tim or Andrew, is that they're also wondering how we're going to fund these projects and how we're going to raise the capital. And what we're looking to do is start with our DSO, our cropping at surface, and the weathered zone where we're seeing, grades of 64 to 68% iron, selectively mine that in the initial years in a very low operating cost scenario, generate revenue to improve that process, and then add the capital that's needed as we build the project to deliver, future production. Because people are often wondering how small companies like ours are going to raise the funds to compete.
Okay, but so there's a couple of things there. One, green iron ore. It sounds like you want to be talking about here. Can people truly rely on it to be green, or is it a case of, well, these days everyone needs to put this kind of ESG spin on it, this carbon credits, net zero, et cetera, et cetera. So how do we define what real looks like?
I'm still learning, and I think the industry is still learning, particularly in iron and steel. It's one of the major producers of greenhouse gas emissions, apparently, across the world. China is the biggest player, 1,200 million tonnes of steel produced a year. Australia produces 5 million tonnes of steel. So they have carbon emissions because of the coking coal. So how do you replace the coking coal? You've got to have a much higher iron grade input and use a different reductant. And people are talking about hydrogen being one of those. The interim step is to go to natural gas. The Middle East is already doing that, producing high-grade pellets for the steel industry. So I think there's that transition phase. In talking to a number of our institutional shareholders, they are wanting us to move there faster and produce that higher grade concentrate, the 68%, because they see countries like in Europe that are steel producers being probably under the greatest pressure to decarbonise, and they're going to be looking for that feed. And at the moment, there's not too many iron ore producers that can deliver.
Right, Tim. I mean, Paul's talking about the green component here being important for raising money. Are you getting pushback from funds, etc.? I mean, you're in rare earths. I think you're probably halfway there already. But do you feel under any pressure from funders to actually tick that green box?
I wouldn't say pressure. I think expectation. I think the reality is to develop the projects that the world wants in order to provide the technology metals to enable net zero policy and net zero targets to be met. It's an expectation. And so it's front and center of what we're doing at the moment. We're in the process of doing a life cycle analysis to understand where our project will sit relative to other potential rare earth projects being developed. But ultimately, we're trying to produce those products that are going to facilitate renewable energy or EVs. There's no point doing it if you can't do it in an environmentally sustainable manner.
So coming, just thinking about where I am today with, Becky Soper and Iron Ore, and thinking back maybe 10 years ago, when I was doing feasibility studies for, some of the projects I was involved in, you would never have thought of solar panels or wind turbines. At best, you would have had a diesel generator and hoped that you just could have linked into the overhead power. Our scoping study, we're looking closely at the power demand, how we can reduce the power demand, but then looking at how we can deliver that power using solar. And Madagascar is an ideal place, just as Australia is, for solar power. So there's the first step towards, a green element of our production phase that we would never have done, 10 years ago.
But so, Angie, Tim talks about there's an expectation. Right. But who's sort of judge and jury on this? Is it just down to the financiers? In which case, one has to ask the question, who are they to judge? You've got the SEC, clamping down on a bunch of funds who have rebadged as ESG. I mean, how much more of this accountability has got to be driven from industry? And how easy is that in an environment where it's a tough economic environment? So, kind of focus on something like that.
Yeah, look, and I think also you're absolutely right, and shareholders or investors and or financiers are going to be demanding accountability against ESG guidelines and principles, and I think you would be brave to promote a project that just went steady as you go, as Paul mentioned, diesel generation, those sorts of things. Case in point for our Paris project, we're looking at, and it's an absolute Monty for solar power generation out in the outback of South Australia, but the greatest demand is crushing and grinding, and we're looking at how we can actually crush only on day shift whilst the sun's shining, and then use that as the inherent energy battery that we will draw down over night shift and so on. But I think if you, and certainly in the sort of early discussions we've had with South Australian regulator, if you don't throw in a couple of key words in most sentences, their eyes start to sort of go dim, and you're really losing their attention. So it's going to come, and at the end of the day, they're accountable to the population of the state, and they're going to have to demonstrate that they're encouraging green development as well.
So Andrew, that was an interesting thing that I just picked up on. There is just crushing on day shift. Normally, once you get that mill turning, you want it to keep on turning. So how are you considering that challenge? Because the power you need to start a mill is often the greatest power. So you must be giving some thought to batteries as well, and maybe even a larger solar field. Is that how you're looking to tackle that problem?
Look, all of the above, Paul, but one of the things is certainly the crushing also consumes, and if we can simply consumes a large amount of power, if we can crush during daylight hours and have solar delivering enough just to do the crushing, we would obviously need to crush twice the speed that the mill requires feed, and you would draw that down during the dark. But look, without doubt, I have a bit of a throwaway line because it said if every Tesla's got 2 ounces of silver in it, if I can get Elon Musk as a shareholder, I'm away. That'll answer the financing the project proposition. So.
No, and what about you, Tim? You were in Africa. I mean, one of my favorite stories in Africa was where I think we lent a company $100 million to buy tractors, and within a year, when we went back to find our tractors, we found 2, and the rest of it being split up for parts. It's a difficult environment in which to do business, and if you're talking about independent power sources, whether it be solar or otherwise, how do you control that in an environment like yours, in Africa?
So, I mean, we're fortunate, Matt, in that we've got low-cost hydroelectric power immediately accessible to the project. So, within the space of a few kilometres, we're basically able to draw off a 132 kV power line to be able to supply that low-cost hydroelectric power immediately to site. Beyond that, just adding on what Andrew mentioned before, the engineering company is also doing a great job as well in identifying opportunities to look at renewable or alternative sources of power, thinking and changing the way in which previously, process plants have been designed, coming up with new approaches to try and tap into new ways and better ways, more environmentally sustainable ways of processing ore.
Right. Okay. But to that end, we talked earlier about where the money comes from, and you're obviously getting cheap energy as part of your infrastructure and so forth. But who are you getting the help that you need in country from government, or do they look at you just as sort of a revenue source? Are you getting credits from the sort of wider African banking or financial community?
No, look, I mean, at this stage, we're driving a lot of the work and a lot of that ESG focus in positioning the project with a very low carbon footprint and a sustainable project development path. We're working through the environmental and social impact assessment hearings at the moment in Uganda. We've had tremendous buy-in from our stakeholders in Uganda who are looking at the ways in which we also look at rehabilitating mined areas. So that whole life cycle for the project, beyond just the mining and processing, it's how we actually then rehabilitate and return that land back to local stakeholders.
So, Tim and Matthew, you mentioned African development banks and the like. Madagascar, off the coast of South Africa, a developing country. They understand the need to improve their mining, their mining world, get more input from companies progressing from exploration through to mining. The World Bank is also supporting that. They've recently announced the construction of a road that is going to help a number of those mining companies get to the port. Also, the European community, because of the lack of power infrastructure right across Madagascar, are looking to support projects with solar fields. So if our project was able to win that interest from a European fund, French or whatever, to put in a solar field, that would be available for our need, but also for the need of the community along our project route. So they are there, they are funding projects, which is also a way that a project like ours can progress without necessarily needing all of the capital that we typically would have to provide. And that is things that we are looking at. I've just come back from 2.5 weeks in Madagascar. It was a tremendous trip. A lot of it was around the scoping studies, which we're just looking at the transport corridor and the port. But also I had a session with the mining minister and his department. They understand what a company like ours needs to go from exploration to that next stage of studies and then through to, the mining phase, and they're supportive of us. So we've just got to keep knocking on the door, making them aware of what we can contribute, and whether it's a mining project, but also on the community side. And I know the other guys have mentioned about the community. We have been doing a lot of work in the community because we see that as an obvious way to get a workforce, but it's an obvious way to, improve the lifestyle of those communities and villages in the area. So it's not just the power, it's the water, it's other things that we can do, which builds trust and respect from the people in Madagascar.
You all three operate in three different jurisdictions, right? We've got Uganda, South Australia, Madagascar here. And I was talking to a chap this morning who has got a project in Papua New Guinea, right? And I remember 10 years ago when we looked at that when I was in banking, it was like, no, that's a jurisdiction which is way, way too risky. Here he is, 500,000 ounces a year later, and very, very wrong attitude. And we're sort of seeing the South American issues flaring up with regards to politics and all sorts of kind of punitive actions by governments there on mining companies. Do you think there's such a thing as a safe jurisdiction anymore, or a tier 1 jurisdiction anymore? Or is it just about how companies interact on the ground, whether locally or federally? I mean, Tim, Uganda, that must have been a strange one for you.
Yeah, look, I think investors probably see and make the designation on safe jurisdictions, and probably then, in hindsight, maybe what they think is safe jurisdictions probably turn out to not be so safe. I think at the end of the day, if you follow the right asset and try and get exposure to the right asset and the right commodities, then they're going to be the assets that need to be developed, that find themselves developed into production. That's why we're there in Uganda. We're there with a large ionic adsorption clay, very difficult to find. It's a long life asset, low capital. And I think we're starting to see companies now going into jurisdictions where 12 months, 18 months ago, they never would have gone previously. It's just the nature of the beast. You've got to go where the assets are.
I mean, but how did you get over it? Because Uganda has, its 70s and 80s, perhaps, and maybe even early 90s, Uganda didn't have the best reputation in the world. You're also in rare earths, which is a kind of very hard to understand, was very niche space. I mean, those are some big things to get over. Have you found the attitude to your project change from when you kicked it off to now?
Definitely. I think from when we started, or when I started working on this back at the start of 2020, we've navigated COVID. We've built a massive resource. We've worked through to a scoping study, and we'll have a feasibility study in a few months' time. We've done a lot of education. We've really tried to help the wider investment community understand the opportunity in Uganda. We've had a very supportive Ugandan government who wants to see Makuutu advancing from exploration to development, ultimately production. And I think on the back of a mining license, which we'll hopefully have early next year and production in 2024, Uganda will open up. It's very underexplored. I think there's tremendous opportunity there. And I think for us, it was a great location. I mean, that's where the asset was. So you've got to follow the asset.
True, but you're talking about internal factors. I'm kind of keen because you're moving through the phases now, Tim. So when you're having conversation with funders, and whether that be export credit agencies or debt eventually debt providers, but currently equity at institutional level, has their attitude to projects like this changed? And where's that coming from? Is it because rare earths, well, you look at the demand numbers, or is it a case of Uganda's more acceptable to them, or is it just because you have advanced this and gone through the phases? I mean, what's appealing for them?
Oh, I think all three of the above. I think more work. We've de-risked the asset to some degree, which has helped potential investors feel more comfortable with Makuutu. We've got a product that's very difficult to find anywhere else. So if, we've got governments and strategic partners that are looking at building EVs and offshore wind farms, you can't do it without the dysprosium and the terbium that's going to come from Makuutu. So Makuutu is naturally a part of any discussion that needs to happen when looking at where are these magnet rare earths going to come from. And from a financing and funding perspective, we've had good engagement with development banks. There's a number of development banks, obviously, that have an appetite for investing across Africa. But there's also development banks that are looking at securing the critical raw materials that are going to be required for the manufacturing industries Western governments are going to depend on for the next decade and beyond. So there's a number of facets here that I think across the broad spectrum, everyone's getting more familiar with Africa, getting more familiar with Uganda. We've still got a lot of work to do, but those discussions are easier had now.
Right, and Angie, so you're in South Australia, right? So is it any easier or harder being in a tier one jurisdiction, as most Aussie companies want to tell me, if they've got assets in Australia? Because I'm trying to, do you get the help that you need? Or is it a case of standing your own two feet, and if it works out, it works out. If it doesn't, it doesn't. I mean, where's the help come from the Aussie government, whether it be state or federal?
And I suppose, Matt, as you mentioned, I live and operate in two of the jurisdictions that are in the top 10 of the Fraser Institute survey. But having said that, I've also operated in a couple of places that are way down the other end as well. And I think there's some common themes is that you can't assume or presume that people understand what you're about and why. And as Tim said, you can't nominate the location of your asset or your resource. And I think if you work on the basis of not surprising or scaring anyone in the process you work for, then you're going to be well set. There are some grander expectations, I think, of regulatory authorities in tier one jurisdictions than there might be in other places. And I'm not speaking disparagingly about them, but some of the things that we need to comply with, and part of it's the visibility of government disclosure and so on in Australia as well, means that we can't have any bumps in the road. When you talk about what are the government doing to help, we can't access export financing or whatever it may be, but certainly one of the mandates or that were put up by the South Australian government prior to their election a few months ago was a significant desalination plant that they have committed funds towards, to the review of that, which is going to open up opportunities. We've got two key challenges for our project, which is really only a few hundred kilometres from the beach, is power and water. and that will answer at least one of them. As I said, I talked before about how we might sort the power issue, but look, there's not as much reliance, I think, in Australia on the government trying to provide support and help you through the process. But look, having said that, in South Australia, we've been assigned a case manager who pre-reviews things for us at the moment. So, they certainly recognise that the contribution that can be made to the state and to the country, and they're willing to assist.
So tell me this. Sorry, Andrew, I'm going to stick with you. In terms of shareholders, investors more broadly, and maybe you will have a view on this one, right? The amount of companies that come and tell me that they're operating in the tier 1 jurisdiction or in the Fraser Institute top 10, wherever that may be, there seems to be more top 10 jurisdictions than there are numbers. So, what do you think shareholders, investors are looking for? Do you think they care about that top 10 jurisdiction component, or is it about, look, based on the fundamental thesis of whatever the metal is, or minerals are, is it the scale of the opportunity ahead of me? I mean, how important is jurisdiction these days?
Look, I think it simply comes down to a risk-reward evaluation as well. There are some places where the risk is higher, and you certainly would want the potential reward to be commensurately higher. If you were going to go and start a gold operation in Western Australia, there's a fair few precedents, and you've got a pretty good idea of how long that will take and the sorts of things you need to deliver. Whatever the project might be in a far-flung country, and I think there are only 10 in the top 10, but most of them are in the.
You'd be surprised. I think there's at least 12 top 10s in the US alone, right?
But, they sit within a regulatory regime that is well understood. And not only that is, history has shown that it can be held up to scrutiny and in fact, unlikely to be manipulated at any time along the way.
I mean, Paul, it's just a few. You're in Madagascar, right? I think most people's view of Madagascar is from a cartoon animated movie. But in terms of operating in a place like Madagascar, which you suspect, or one suspects the environment is a big piece of this, is it harder for you because the country has, onerous expectations of how you should behave? Or is it just like any other jurisdictions and your responsibilities, your accountabilities is the same?
I'm guessing it's the same anywhere in the world. People can form a view, particularly if they've never been there, from reading the books or watching the movie. When you actually get there, you might find that the reality is not quite the same. Where our projects are reminds me of remote, distant, isolated northwestern Australia. Hot, dry, grass doesn't grow, trees don't grow, et cetera, et cetera. Now, having said that, you mentioned, and both Tim and Andrew spoke about tier 1 jurisdictions, as in the place that they have their operation. We look at it differently. And with our background of our team, we look at tier 1 approaches and tier 1 delivery, whether that's in social or community or in operation approaches. So, and I think that when you deliver the best in class, when I call it that, or the tier 1 approach, in community and social work, in environmental, in power, in how you put together your process, you're going to be well regarded by the officials in that country, and hopefully those also wanting to critique you. So we're very much about, in a developing country like Madagascar, which has a very good mining code and a very systematical, logical mining code to work through, that having tier 1 approaches and the methodologies is what we can do to differentiate ourselves and therefore get the support of government and the community.
Okay. Sorry, carry on.
Yeah, I think Paul's spot on. I think that tier 1 approach is something that we should all be striving to achieve and deliver. And with regards to the distinction between tier 1 jurisdictions or not, I think the approach that every company needs to take to developing assets needs to be, with the best intent. And if they do that, then ultimately, they're going to deliver a product that they're ideally going to be proud of.
But talk to me, Tim, because you're at 170, 180 million market cap now, and you've kind of worked through the phases for the last couple of years. We can talk about tier 1 behavior, which is great, but specifically, what are the things that you think that you did right that shareholders are probably aware of, and maybe other investors need to be aware of? And what are the things that are yet to happen, that still need to happen, to allow you to continue to tell a growth story?
Yeah, so I think the successes of Ionic are probably a lot in due to the fact that we've gone about the work program and delivered on what we've set out to achieve. We've delivered large resource updates. We've delivered a scoping study. We've been able to advance Makuutu in challenging environment through COVID, and been able to add a lot of shareholder value over the course of the last 2.5 years. Beyond that, there's a potential significant value unlock in the product that we're potentially going to produce from Makuutu. So the strategy of going downstream, developing our own refinery or whatever that may be, and also potential to look at magnet recycling and participate in the circular economy of rare earths long term, I think, presents Ionic with a fantastic opportunity with these new supply chains that are going to be built over the next few years. Okay, so
you're working into the right thesis in terms of the metals, right? So I get that, and lots of companies that come on here and say they've been through the kind of study phases. I'm more interested in about what's the kind of the personality required. What are the whether it be ethical or in terms of work ethic, etc. What are the things that distinguish a company which is going to succeed from a company which is just going through the motions and participating for the promote, as it were? I'm interested in what what's the true character of an individual or a company which says this company is more likely to succeed than others.
I think you need to be pretty relentless. There's plenty of things out there that can push you back or hold up progress. I think you just need to be focused on what's the ultimate end goal. What are we aiming to achieve? How do we do it? How do we deal with the things that pop up along the way? How do we navigate that? And, also probably have some contingencies along the way. Look at opportunities to accelerate where you can. But ultimately, it's around delivery. Setting out, we set out an ambitious time frame to deliver a feasibility for Makuutu and ultimately a mining license later this year, a mining license application. We did all of that through COVID. We did push pretty hard. We built capacity in Uganda. We looked at other ways in doing things rather than a conventional approach. You have to be relentless. You have to be pretty focused and target driven.
And Andrew, what's your word? How would you describe what success could look like, just in one word, and why?
One word. I don't think I ever respond in just one word, but completion would be the word, and that's completion of what we said we were going to do. And just thinking about it, tomorrow is the second anniversary of when we last raised funds to advance the Paris Silver project. So we raised $8 million, committed to complete the PFS, start regional exploration, a list of things, and tick, 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 we've done those. So unfortunately, not reflected in our share price at this stage. Certainly we've increased value of the project, and we will take it forward. But at the end of the day, as Tim said, some of these things, if it was any easier, someone else would be doing them. These rely on an absolute fanatical, and relentless pursuit of what you think the right goal is. And the other one is too, if you're a bit of a shyster, you get caught out in this pretty quickly in this game. So people have got great memories. So.
Amen. Paul, what about you? How do you frame it?
Well, our word has been urgency. We listed on the ASX in December of 2020. And then 3 or 4 months later, it was COVID. I was in Madagascar at the time. Pleasingly, I put together a team, and we continued through Madagascar, remotely managing the geological program, the drilling and everything else. We had a sense of urgency that regardless of what was happening around us, we were going to deliver on our promises in the prospectus, and we did that. We got the resource of 200 million tonnes announced in April of this year on track, and on it goes. So we've had a sense of urgency. We haven't, stopped for any other reason. I like the words relentless, which Tim and Andrew used. I might take that up myself. We've been just continuing to work against the plan. And that has been well regarded by the shareholders. And they can see where we're heading. They can see the operational things. They can see the technical things. We're now we've just embarked on the scoping studies. We've engaged the engineers. I've just come back from, doing the transport logistics corridor for the first time, driving the road, visiting the port. I was very encouraged by what I saw. We've got something we can build on there, which is going to, I believe, lower the transport costs compared to what we first thought. So it's this whole sense of urgency of different layers of work being progressed with a small team, but a capable team to deliver on our promises.
Okay, and gentlemen, look, I appreciate your time today and some of those insights, and it's always interesting to see the way that your brains work, quite frankly, and sort of how you come at promise. Look, today's been about trying to talk about things which may lend comfort to your shareholders, but also to investors more broadly in a very difficult environment for some people who've maybe not been through any of these kind of downward cycles before, in terms of maybe how they should start thinking about projects, in a little bit of hand holding as well. Doesn't go amiss. But I'm going to ask you all, just to finish off, give me 2 minutes on why you think your shareholders should continue to support you and why new investors looking at you should perhaps consider you going forward as the market recovers. So, Tim, I'm going to start with you.
Well, I suppose where we are with Ionic rare earths, we're going to be producing a very unique blend of rare earths, of individual magnet and heavy rare earths. And I think what I would implore investors to do, looking at getting into the rare earth space, is really understand the individual rare earth elements, understand where they're going to be used in future technologies, and then try and do some work to understand where is that material going to come from. And I think fundamentally, once investors understand that, they know it's a very short list of potential projects that can supply the full spectrum of magnet rare earths to be able to facilitate all of the EVs and offshore wind farms that have already been committed to. Beyond that, when looking at who's going to be developing heavy rare earth capacity and who can genuinely provide the heavy rare earths to help Western governments build alternative strategic stockpiles of it, it's an even shorter list. So, it's really do the work to understand the individual projects, the attributes of the project, the product, and where it's ultimately going to end up. And I think hopefully, once investors have done that, they'll realise a great opportunity presents itself with Ionic.
Thank you very much. Andrew, what about you?
Well, look, we've talked about lists tonight, and Tim talked about how his is getting shorter. But if you talk about high-grade silver projects, there's only one in Australia. The rest, without speaking ill of my peers, there's 2 or 3 others which are base metal projects. Ours is presented as a silver-only project, and as mentioned before, the supply-demand metric in the silver space is compelling because, as I said, if I add up electric vehicle consumption, solar panel consumption, all the other electronics, and even changing from indium to silver in the screens of your touch phone, means that demand is going to continue to grow. And limited supply. South American primary silver producers have halved their head grade in 10 years. So what's the point of distinction? We're the only silver project in Australia with the grade that we've got. We're in a jurisdiction, or I won't say, we're in an area that has no community watershed, water catchment issues and so on, which is distinction from our peers. But without one word, but my line is, if you're thinking about investing in silver, you should be thinking about investing in Investigator. We've done what we said we were going to do. We're pushing forward to completion of the DFS, and the project's eminently financeable at silver price. Not quite this week, but a few weeks ago, and longer term, you saw what happened to the market in March 2020 when COVID erupted. We've recovered long since then, and I'm sure we will recover past what's happened in the last few months.
And Paul, let's finish with you.
Well, what's special for us is that the knowledge that we've delivered since listing has been significant. We've proven that the Becky Soper project is a significant iron ore resource. We've only flagged 200 million tonnes so far, but there's potential for in excess of 500 million tonnes of iron ore at Becky Soper. And that upgrades very readily to plus 68% iron, which is what the market is looking for going forward. What our shareholders are looking for, and I think shareholders who want to get on board with Akora are probably looking for as well, is an indication and clarity on the capital and operating costs. They're the questions you always get asked. What is the distance to port? What will be your transport cost? For a project like ours, we've engaged the engineers, we're doing the scoping studies, and November this year we'll deliver on all of those answers for capital and operating costs, which will give our investors the confidence that this is going to be a good project to go forward. And therefore now is probably the right time at the prices that we're seeing to get on board Akora and be part of the journey.
Well, gentlemen, thank you very much for your insights, words of comfort, as well in this sort of market that we find ourselves in at the moment. Hopefully, investors listening to this have got something from this. I'd like to thank Tim Harrison, MD at Ionic Rare Earths, Andrew McIlwain, MD at Investigator Resources, and also Paul Bibby, MD and CEO of Akora Resources. Thank you, gentlemen.
Thank you very
much.
much.
Thanks, Matt.